Okay, in this piece, I want to talk about product transfers. The headline says it's a coming of age for these fellas. Now, again, I want to go back to September 2022. It's etched on my forehead. Liz Truss, thank you so much for everything you've done for the property and mortgage market. The ghost of Liz and Mr. Kwarteng are still wandering the corridors and causing issues. Because back in September 2022, after that mini budget was launched, what happened almost immediately is that mortgage rates increased significantly. They went up by maybe 50 to even 100% increase over, I would say, a week, 2 weeks maximum. So massive issues. Linked to that, what that meant in practical terms, not only is the rate higher, but when you approached a lender and put your application in, whether it's for refinance or a purchase, the stress tests had to be at a higher interest rate. And many landlords were being told by us as brokers that you failed that stress test. The rents weren't strong enough to service the mortgage payments at this artificially considerably higher interest rate. And simply that's because rates have gone up overnight. Rents are going to take a year to 2 years to catch up. So you've got this lag. And in the meantime, that's the practical issue, that you guys couldn't refinance, couldn't release equity, couldn't come off your deal to go to another deal with another lender because you were failing these stress tests. Now, where do product transfers come in, you ask? Well, first thing to say is that all banks and all building societies will offer a product transfer. So if you're coming to the end of your fixed deal, for example, then the advantage of a product transfer over refinancing from lender A to lender B is a number of things. But the first thing is, on general speaking, no stress tests. So we sidestep that big issue I've just described a couple of minutes earlier. They won't check the rent to the new mortgage payment. They've already got you as a customer, so they're highly likely to offer you that next best deal. Linked to that, there's no credit checks. The only caveat I would say to that is if on the security property and the mortgage attached to that, you've had arrears, or you currently have issues with late payments, then I think they're going to veto you your ability to get a product transfer. But I'm assuming that is a real minority of people. So for the vast majority of us, we should be offered a credit check. Now, what I also notice as a broker in this arena is that most lenders keep a track of what they perceive as the valuation of your security property. And we get an option as a broker and you as a landlord to take that valuation or challenge it. So what I have seen on a number of occasions are lenders' perception or their version of what they think the value of your security property is can be higher than the reality. And if that's the case, it might actually mean that when we check that, and as a broker, quite often we can talk to the lender or we can log onto the systems and see in advance what that valuation figure is. And if it's higher than what you thought it was, then from a loan to value point of view, it might drop you into a lower category and give you access to even cheaper deals. The final thing is about speed, because when you refinance to another lender, I would say to our clients, you should be building in or starting an application about 2 months before you come to the end of your deal. That's nice and comfortable, allows for some delays or any sort of small sort of bumps in the road. But 2 months before you come to the end of the deal is fine. But of course, life gets in the way, and we're often getting calls from our clients with weeks to go, sometimes days to go before they come to the end of the deal. And of course, once you come to the end of the deal, it's highly likely that the interest rate is going to increase, and therefore your mortgage payments are going to significantly increase as well. So the advantage of a product transfer is speed. We can get you across to that new deal very quickly. Like I said, the valuation is already probably on the system, so the lender doesn't have to do another valuation. We're not doing any credit checks. The documentation requirements are very minimal, and there's no solicitors involved. So moving you from your at the end of your deal onto the new one. So minimizing any, those increases can be really sort of crucial. The one thing I'd say about all this is that the product transfers is on one big assumption. So I should make it, underline this point, that this is on the basis that you're not looking to borrow any extra money. So product transfers are designed to move the existing debt across onto the new deal. So please bear that in mind. Now, final point, I've talked about all banks and building societies offer this. So this is my tip. This is my takeaway point. So you might want to make a note of this. Most portfolio landlords will have to knock on the doors of secondary non-bank lenders. And whilst the majority of them will offer product transfers, some do not. Underline that, some do not offer product transfers. And that's because their model with some of these lenders is that once they get a number of mortgage deals through the door, they package that up and then they sell the mortgage book onto another lender. And that can be within 3 months, let's say, or 6 months of you coming on board as a new customer. So the intention is you shouldn't be with that lender in 2 years' time or in 5 years' time when your deal ends, because they've sold you on. So they've never thought of putting product transfers in place. But the market has changed, and now a number of these lenders and that model isn't as robust as it was, and they're not being able to sell on the mortgage book. So now they're retaining it and they still don't have any product transfers to offer. So you might be coming to the end of the deal, and let's say that there are issues with your credit checks. Let's say you don't hit the new stress test calculations, and therefore you're not also being offered a product transfer. You're essentially a mortgage prisoner. Your only option is to go on to standard variable rate, and that will be significantly higher. So the takeaway point here is, if you are coming to the end of the deal now, for example, and you're looking to move to another lender, let's say, and your broker is offering you an option of a brand new lender at that point, then I would say that you should be talking to your broker about the new lender that's been recommended and whether that new lender has product transfer. Because if you're going to move to this brand new lender, then having one eye on whether that new lender has got product transfers or not, for me, is now becoming a more important point that you need to understand as a landlord. Now, it might be that your broker's offered this new deal with a new lender, even though it doesn't have a product transfer. It may well be the right advice for you. I'm not saying never ever go to what a broker's recommending if it doesn't have a product transfer, but you need to be mindful, because you are potentially kicking that can down the road if that lender does not have a product transfer. And it might be you say to your broker, okay, well, what's the next best lender that does have a product transfer? And if the difference is really marginal, then there's a decision to be made. You might actually want to pay just a fraction more on the rate or a fraction higher on the fee to go to a lender that will have a product transfer, because they are now becoming more and more important as an option on the table for you as landlords. I'm hoping that made sense for everyone. If it resonated with people come to the end of the deals and want to understand about product transfers a little bit more, then there will be a link at the end of this piece to our online diary system. Book some time with the team, have a chat, no obligation, and we'll see if we can help.